In this video, I will show you one of the best 1-minute scalping strategies I've found for scalping crypto, stocks and Forex that will grow your trading account as fast as possible. This unique strategy consists of 3 powerful TradingView indicators not a lot of people know about. And to prove how well this strategy works in different market conditions, I will backtest it 100 times with an initial account size set at $1,000 with a 2-to-1 risk to reward ratio. So make sure you stay focused throughout the whole video, as there will be quite a few rules that you need to understand. Like, subscribe, and turn on those notifications so you don't miss out. Now without further ado, let's get into it. Okay, so we're currently looking at the price of Dogecoin versus USDT on the 1-minute time frame. Now let's go ahead and add our indicators to the chart. So the first indicator we will search for is called Optimized Trend Tracker, which is this one here by Kivansk Ozbilgic. For the second indicator, let's add our heat map volume indicator, which is this one here. And finally, let's add our last indicator, which is named the HLC, which is this one by Jason D. Hadley. Now we do need to make some adjustments to our volume indicator, so double click on it. And in the inputs tab, we're going to be changing the MA length to 300 as well as our STD length. We're not going to make any changes to these other indicators. Okay, now let's understand how these tools actually work. First of all, let's start with this optimized trend tracker. So the optimized trend tracker is an indicator that provides traders the ability to find an existing trend, or in other words, to see which side of the current trend we are on. We are under the effect of an uptrend in the case where the price is above our OTT line, and under the influence of a downtrend when the price is below our OTT. So this indicator consists of these 2 trend trackers. The purple line serves us as support, and it doesn't react quickly to the price changes. The blue line reacts to the price changes a lot quicker, and every time it crosses the purple line, the indicator will issue a buy or sell signal. In this strategy, we're not going to be using this indicator as our first confirmation indicator. Instead, we're going to be using our HLC trend. I was talking about this tool in one of my previous videos, and this is basically a 2-line cross indicator. If we zoom in, we can see that it consists of the green line, and then we've also got our red line. Every time the green line crosses the red line upwards, this is a signal to go long. The exact opposite works for short signals. The signal is also confirmed by the change of the background's color. And we see that the indicator also has these yellow backgrounds. This usually indicates the time when there is side movement in the price action and there's pretty much an indecision on what's going on. We're going to be using this to identify the continuation trend entries. And finally, we have our heat map volume indicator, which is really important in this strategy as it prevents a lot of false signals issued by these 2 indicators. For example, if the volume in the market is higher than usual, the histogram will either be colored in yellow, orange, or red. These are the only times when we can take a trade, because we do not want to be entering trades when the volume is low. Okay, now let's actually understand how to trade with this strategy. So we're only going to be looking to buy when the OTT indicator officially confirms an uptrend. For that, the price action has to be above our purple line. The HLC has to issue a new buy signal. This means that the background has to either turn from yellow to green or from red to green. And finally, to confirm the signal, the volume in the market has to be higher than usual. So just like I said, the bar has to either be colored in yellow, orange, or red. And once we have all of these conditions met, we can go ahead and place a buy signal on the close of our trigger candlestick. Our stop loss will be set at either our most recent swing low or our purple line. It just depends on which of these 2 prices is closer to your entry point. Then our take profit target will be set at 2 times the risk. And as you can see there, we had a nice successful trade. If, for example, these 2 indicators are confirming the signal, but the volume is not quite there yet, we can wait for another candlestick for it to catch up. But the price action has to be closed at the same level where we had our initial entry. The exact opposite is true for short trades. First, we need to have an official confirmation that we are in a downtrend. For that, the OTT has to issue a new sell signal, and the price action has to be positioned below our purple line. The HLC has to issue a new sell signal, meaning that the background has to either change from yellow to red or from green to red. And then our volume has to confirm our entry. We would be entering our short position on the close of our trigger candlestick. Bring your stop loss up towards either your most recent swing high or your purple line. As I said, whichever is closest to your entry point. And once again, we're going to be targeting 2 times the risk. Another successful trade. Also, I want to give you some examples where you wouldn't have taken a trade. So for example, here we see that the HLC issued a new buy signal. The volume agrees, but the OTT hasn't issued a buy signal yet. So in this case, you do not wait for it to catch up. We simply just ignore this signal altogether. Also notice this. Around 95% of the strategies on YouTube would actually give you trade entries somewhere at this time. And only 5% of the strategies would actually avoid taking trades when the market is ranging. So you kind of have to get ready for not getting a lot of low quality trades. Also, if your strategy issues a signal to go long or short on a massive candlestick like this, you would normally just skip this signal because we want to control the outcome as much as we can, and these price movements are extremely unpredictable. And this is what I'm talking about right here. We see that we got this sell signal here, and it definitely wasn't the best time to enter a trade as the price action did retrace. So let's actually now do our back testing and see how well it performs in different market conditions. Testing is done, and we can see that the strategy is showing some impressive results. Our win rate is 60%, which is really high for such a risk to reward ratio and low time frame. We also managed to increase our account size by 368%. For my backtesting, I was using the price of Dogecoin, Ethereum, and BTC starting from the 21st of October. So yeah, these results are definitely really good. The profit factor is also pretty high, and we had 8 consecutive wins against 4 consecutive losses. Of course, these results will be different when trading live because of high spreads and fees, but if you can make at least 1/3 of that, it would still be able to make a lot of money. Okay traders, I hope you enjoyed this strategy. If you did, please leave a like, comment, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.